Market Musings podcast with Fairbairn and Russell. Well, hello and welcome to the Market Musings podcast, where today we're going to be talking AI, that's artificial intelligence. And it's a shame, Kenny, that we haven't spoken about AI before, given that the big hype that went on throughout the summer there, of course, or the chat GPTs coming into the public domain there, people picking up on it. NVIDIA shares doing very well off the back of a lot of AI, graphics card sales, etc. And it seems to be certainly the latest thing that everyone is getting excited about. Perhaps it's the next .com boom, I don't know. But here today to talk to us about AI and, of course, the company that he has co-founded behind the scenes there is Jonathan Bixby, co-founder of Cykel AI. Thank you very much for joining us today, Jonathan. How are you doing?
I'm well, Mark. Nice to be here.
Well, it's good to be talking. I know we have done an interview before, but let's get to know you a bit more and what's led you into the world of AI. Maybe we can talk about AI and why it's so exciting and perhaps a hot sector for investors and for the world, really. You know, we have likes of Elon Musk, I think, talking about the dangers of AI with our Prime Minister, Rishi Sunak, at a conference just last week, I believe. I saw a clip on Twitter there. But Kenny, how are you feeling about AI? You're the elder in the room here. Are you scared by it?
No, not at all, Mark. You know, I embraced crypto pretty early on and done a lot of the heavy lifting. So I'm not scared to jump in. So Good. Yeah, I'm really looking forward to it, Jonathan. It's great to have you on the podcast. And we chatted off air, and what we said was that you can have the best projects, the best ideas, or the best software in the world, but if you don't have the right people to run these projects, it's never going to get off the ground. So we're great believers that people invest in people, and what this podcast does, it allows investors to. They usually only see you in the standard interview where you get 5 or 6 questions. You've probably answered that same question, 10 times before. So this is a chance to get investors to see another side of you. And it's almost like a plotted history of Jonathan Bixby. You can go back as far as you want, childhood education, college degree, university, whatever you went to, first job, maybe worst job, biggest success, biggest failure, motivation, anything you want. And we'll probably go down a few paths along the way, but really the floor's open to you, Jonathan, for the next 10, 15 minutes, just to give us a bit of your background and then your career that led you up to the co-founding Cykel AI. I think I'll be interested to hear.
For sure, yeah. So going back, I mean, I think it's fun to sort of go back and see. Everyone always asks the question to even my 19-year-old, what do you want to be when you grow up? So I've got 3 kids. 19, 17, and 14, which makes me feel unbelievably old. And when I was a kid, I was particularly interested in international relations and politics. So my background was, and still am, super interested in foreign affairs. How does the world work? How do nation states interact, obviously, which is a big topic right now, or don't interact. And when I went into university, I went right into politics and international relations. And I had it all kind of figured out. I've always been quite ambitious, but I'd figured out that there was, Canadian, I'm Canadian, obviously, hence the accent. And a Canadian had never been the Secretary General of the United Nations. So I had this idea that, there had been people from Burma, there had been people from Ethiopia, there had been a whole bunch of different countries. And I said to myself, Canada is very diplomatic, right? Like when we stand on your foot or you stand on my foot in a bar, I apologize to you. We're good at saying sorry and we're well liked. Why can't a Canadian be the Secretary General? So I had that in my mind from quite an early age, actually, and went into politics and loved it. And when I say politics, I mean political studies, to be clear, not into politics. And then I actually went to Keele University in the Midlands in the UK for my 3rd year, because Keele had one of the oldest and most respected international relations programs in the world. So studied at Keele, definitely got a sense of the Midlands, the pottery area. And that's another topic. And had a nice long rainy winter out there. And then came back for my 4th year, my graduating year, in 1999. So imagine I'm this poli-sci wonk guy, 1999, and what's happened in 1999? Software Web 1.0 is taking off. So I'll never forget actually sort of the first interactions I had with Web 1.0, which was I had gone to uni with a guy in first and second year, lived in my residence. And in fourth year, in 1999, he came back to play basketball with us and had started a startup and, regaled me with all of the conversations about startups and getting venture funding. And I didn't know anything about any of it. And I was intrigued, I guess you could say. And so when I finished my fourth year, again, internet stocks are booming. The NASDAQ is at all-time highs. I have 3 offers on the table. So offer number 1 is to get a prestigious master's at a great US school. Offer number 2 is to actually go into politics and start working the political side. And offer number 3 is a business development manager position at a startup. And so I had this moment where I said to myself, I do want to be the Secretary General. I do want this life, but my God, this software stuff is interesting. And so with no background in computer studies, literally didn't understand what code was, no background in business, I took the business development manager position and moved to Toronto and started my career in sales. And again, I gift of the gab a little bit. I could talk. I had no idea what I was getting into. The only thing I remember vividly about that was buying really nice chino pants that I thought looked really good and a polo shirt. And so I went and bought a couple polos and some chino pants and walked into work the first day knowing nothing about technology. And so that was sort of the start of, and again, luck and some other things along the way, but that's how I got into tech. And everyone always asks me on the computer science stuff and the business stuff. And my perspective on a lot of that is that you can learn it. So that's actually where I started. And I worked for a company called NTS Internet Solutions that had been around for about 5 or 6 years. And again, this will date me, but they were selling what was then called content management, which is you can go, Mr. Website owner, I can build you a website and you don't have to rely on me to maintain it. You can write your own content, manage your own users, and we make it really easy. So essentially the idea there was we were selling hundreds of thousands of dollars worth of website creation tools that we had built, mostly to government and education. So what happened was the exact anti-story to many people, which is 2001 hit, the tech industry got destroyed, and everyone went back to school and into government. So our company thrived through that time. So I don't have the typical had millions on paper, went to zero story. My story is this company started growing like crazy. And by 2001, the company had grown to a point of 40 to 50 people. I was essentially managing the entire business, and we got an acquisition offer. And that acquisition offer was quite substantial. And I walked into the office one day, and this is again sort of another epiphany in my career, which was I walked into the office one day, acquisition offer on the table, went to the 2 owners of the business and said, what percentage do I get? And pregnant pause. And they said, you're an employee, man. Like you get your salary the day we close the deal. That's all you get. And I had this deep understanding in that moment that I needed to be an owner of a business and I needed to take the risk that they had taken. I don't begrudge at all their position, 23 years later, now that I'm sitting in the seat that I'm in, but they took the risk. It was their capital, their risk, and their reward. And so I left, and I left before the acquisition closed, and I went and started a business with my identical twin brother. So I have an identical twin brother, and we started a business called Iron Point Technology in 2001, 2002, which was essentially a content management system business. And we were focused on the US and BC markets, British Columbia and Canada. And fast forward 2 years, actually, let me back up. So we started the business on a Monday, and that Tuesday we closed our first $100,000 deal. So we hit the phones. We were working out of our co-founder's apartment. My office was the bathroom of all places because I felt like it had the best echo. It felt like I was in some like wood paneled room. So I felt like it was a very powerful sales voice that I could muster in that bathroom. And so literally we hit the phones. The three of us were sales guys and we sold our asses off for months, closed our first $100,000 deal on the Tuesday after we started the business. And fast forward 2 years, we had one of Canada's largest, our fastest growing tech companies. The acquisition of NTS fell through, so we bought them. So I bought my old owner's business out, and it was fantastic. And those guys worked for me for a while. And in 2006, we sold the business to the Active Network, which was a New York Stock Exchange listed tech company. And so had my first exit when I was 20, I think I was 24, 25, and no, 26, sorry. So I had my first child at that point. I promised my wife that I would take 3 months off over the summer after the acquisition, because as you know, running a startup is hard and takes a lot of time. I lasted 3 hours before I started my next startup, which was called Strange Loop Networks, which my wife never, ever hesitates to tell me about. And Strange Loop was started with the concept of making the internet faster. So it was super geeky technology. We were cutting edge of sort of Web 2.0. Mobile was starting, and basically created a startup that raised Canada's largest angel round of funding back in 2006, 2007, and built from 0 to about 70 employees incredibly quickly. Had big customers. eBay was a customer. Walgreens was a customer. Like, we were hitting the big time. And then spacebar, 2008 happened. And so probably the biggest and most challenging thing that ever happened to me as a leader of a company was 2008, where we are 70, 75 people. Our burn is massive. It's all about growth, not profitability, kind of echoes of what happened through 2021, into 22. And I had to make a decision as CEO to cut half my company. So I'll never forget it. Walked into a room, had 35 people. The world was ending, as you guys can remember, right? Where is the financial sector going? Is it being destroyed? What do you do in that situation? And I had to go in and lay off 35 incredibly smart, good people. And that was the hardest. That was definitely the hardest business day I've ever had. The good news out of that story was that we actually rehired a bunch of those people, grew the business back up. And by 2013, we were in a position where we sold the business to an Israeli startup, an Israeli listed company called Radware, which is one of the big IT companies. And it had a good exit, a 6 to 7 year build and a really good exit. So now I'm in 2013. I've got 3 children. And one of the things that I had learned along the way, that when you grow businesses, you get all these HR consultants in. So you do your like parachute color, you're a blue parachute or a yellow, or, your personality basically. And I had done a couple of these things as we had grown the management team. And every single time I had done one of these, I was taken into a room with an appalled person and basically said, you can't manage anyone. Like you are both unmanageable and should never manage anyone. And what it came down to was that I'm fiercely independent and I never actually follow up with anyone about anything, because when I tell you I'm going to do something, I'm going to do it. And I never think to myself that I actually have to manage. So back in 2013, I actually took a year off. And that year off was incredible. I got to be a really good gardener. I'm quite a good gardener. I can grow good garlic, and took trips around the world with the family. I started doing angel investing, and then I got exceedingly bored. And angel investing, if you haven't done it, is a tough business, because you're kind of the hottest woman at the bar when everyone needs your money, and then they take your money, and then the only reason they ever come back is when they need more money. And so it's just it's a tough, maybe it's like an early stage public market investor sometimes is how you feel. And so I got sick and tired of that. And then I pivoted into what I've been doing for the last 7 or 8 years. which is kind of this question of, and I like answering it this way, but my 8-year-old would come to me and say, "Dad, what do you do for a living?" And my answer is, I'm Willy Wonka, but instead of chocolate bars, I create really great companies in really interesting spaces. And so back in 2014-15, I chose 3 areas that I was particularly interested in and that I thought were high growth. So one of them was fintech, one of them was health tech, one of them was gaming tech. And basically, I started to build companies in those areas. And so since 2013, I have built 12 to 15 companies. I fund the companies, I create the companies, I build them to a certain level, and then I hand them off to incredibly professional management teams that build them moving forward. So I'll just give you guys a couple of examples, and we can sort of walk through, some of the pitfalls of building these companies. But I've had some pretty incredible successes. So I've done 10 IPOs. I've raised almost $1 billion. I've had 2 unicorns, so $2 billion companies that I'll talk to you about. And then coming to the Cykel conversation, which I definitely want to get to, I think of all the things that I've done in my career leading up to this moment, I think AI is larger than any of the other things I've ever done. And we'll talk about that, and I'll place that sort of future in the conversation. The first company that I created was a company called Coho Financial. And Coho Financial, if you fast forward today, is Canada's fastest growing bank. So it was the Revolut of Canada, if you will. And the idea behind Coho was a very simple statement, which was back in 2013, the big 5 banks in Canada made tens of billions of dollars. I don't have the number offhand, but it was 20-30 billion of profit. And they were the least liked entities in the country. They ranked lower than cell phone companies in terms of net promoter score. And so we sat there and I said, everyone hates banks. The banking system isn't satisfied until you're not satisfied. And they're all old school. And why don't we create a challenger bank? So Coho was created. It couldn't be called a bank or a bonk or a bonko. It was just Coho Financial. And we basically came with this idea that we wanted to delight our customers with a digital banking product. So if you fast forward to today, we've raised hundreds of millions of dollars. I stepped off the board in 2019. Company, and this is public, but has been valued around $1 billion, 800 employees, 1 million customers. That is, exactly what I love to do, which is kernel of idea. Let's go against these big incumbents. Let's hand them their ass over things that we can control, like customer service, like a delightful digital experience. Let's listen to our customers. Let's delight our customers. And out of that comes, one of Canada's biggest fintech successes. Another one that I think is probably good for the British market is a company called Argo Blockchain that you guys are probably familiar with. And the question around Argo was, where is crypto going? And I would know, Kenny, you mentioned crypto earlier in the conversation. Back in 2016-17, I went down the crypto rabbit hole. And the crypto rabbit hole, we don't need to go down on this conversation, but was just a fascinating discussion about debt and money and sovereignty and all these things actually that tied very closely back into my international relations and politics, was closely tied to the economics of money. And so I became quite convinced, and still am, that BTC is an incredibly interesting store of wealth. And I think will get more and more interesting over time as companies inflate away their currency. And I basically said, what's the best way to get into this space? And the best way to get into the space, in my opinion, back in 2017, was crypto mining. So started a company called Argo Blockchain, was going to list the company in Canada and got connected into London. So I literally flew into London for the first time since leaving Kiel a dozen years earlier, and basically came into London with this story that we were going to create one of the world's most interesting, innovative, green eco miners. We raised a bunch of money at, Bitcoin highs. We went public at 16p, as everybody knows. And I'll actually never forget the IPO. We're at the London Stock Exchange. I got my brokers next to me, my lawyers, and like all the people, that get you there. You have some tea and a little champagne toast, and then you count down from 20 to 1. The stock starts trading. it goes on the big board 16-10, 16, 15-9, 15-7, 14, and just starts dropping like a stone. All the brokers leave stage left right now. Like, so all of a sudden they just put their heads down and walk out of the room. And we actually traded that company down to 4p. So it was a disaster. And it was a disaster because crypto winter hit. This was, the first of my crypto winters. I've been through a couple of them. And basically the mining industry is predicated on buying machines at a certain price at a certain time. And when crypto prices go up, it's boom. And when they go down, you get toasted. So one of the best business decisions I ever made was when crypto hit a low of about $2,000 or $3,000 in that 2019-20 winter, we spent all of our cash on machines. So we went and made a bet. And the bet was the halving's coming back, crypto's coming back, and we need to get these machines into production at that time. The rest is history. Frankly, we were laughed out of many rooms in London. It was a very difficult time to go back to my shareholders and say, believe, guys, like our thesis is right. Our thesis is right. And then obviously through 2020 and 21, you had an unbelievable crypto run. Argo went from 4p to £3, fastest growing company on the LSE. And everyone made a ton of money and everyone thought we were heroes. Good example, I think, in business of right place, right time, but also being really convicted about your thesis. And we had a good thesis that turned out very well. I think crypto's going through another run that we can go into if you guys want to, but that was sort of an interesting piece. And then fast forward to today. So started with 3 areas that I was particularly interested in. Since then, I've added 2 more. So I'm particularly interested in carbon sequestration, carbon credits. And then the game changer of all game changers happened when AI and ChatGPT launched about a year ago this month.
Okay.
Yeah. I'm going to pause, and if you guys have any questions, I'd love to dive into any.
Yeah, I was. Yeah, you were on a roll there, and you were talking very passionately, and I didn't want to interrupt you. But before we do get on to AI and carbon credits, let's just have a think about some of those past things that you did. I mean, you said you did how many IPOs? Was it 100?
10.
Sorry, 10. Sorry,
Cykel
10.
is my 10th IPO.
Cykel is your 10th IPO, and you've raised billions along the way there. I mean, is that what excites you then? Is it the IPO sort of that excites you, and then do you like to sort of move on and do something else and start again? You talked about sort of building and selling.
Yeah, no, what excites me, Mark, is finding an idea. Like, the way I kind of describe it is I have a castle in my mind that's up on that hill and it hasn't been built yet. No one's seen it but me. And I want to go build that castle.
Okay.
I know myself well enough to know that I'm not the one who's going to build the walls of the castle or manage the people, but I know where that gold is and that castle is. So the love is the spark of the idea, leading to building the team, leading to customer discovery and building a product.
Okay.
So
okay.
At that point, I need to leave because I can't manage people, past 20 or 30 people in an organization.
Okay. Kenny, this sounds very much like you to me. And Kenny's on his way for his first IPO, by the way.
Nice.
Yeah. I'm going through that pain at the moment. So we can maybe talk about that in another podcast, Mark. We're still trying to get all the ducks lined up, but it's certainly been an eye opener for me. So it has.
I mean, on that, it's like timing is everything. I mean, obviously we're more focused in the mining space, and of course that's. Yeah, well, the whole market in general is not doing so great, particularly mining stocks at the moment. They're all not doing so well. But I did notice, of course, Cykel listed the other day, and it went up 3 times. So that, I mean, I know you missed the opening bell because you had issues with transportation. I know your plan was to actually get to do that opening bell. That would have been nice to have seen it trade up, but of course, it didn't. It was not possible. But timing is everything, isn't it? I think that's what perhaps I picked up from maybe one of the lessons you learned with Argo there. Timing is everything.
Yeah, I think timing and being in a position, we always talk about, in Canada, because we're hockey nerds, about where the puck is going. You guys probably talk about where the ball is going. you have to know where the ball's going to be a good football player. And I have a knack to know where the ball is going. And obviously we're going to dive into AI in a second, but
Yeah.
the ball is moving very quickly and definitively in the AI space right now.
Yep. Can I just take you back a wee bit before we sort of move on to AI and Cykel, Jonathan? I mean, obviously, there was a lot of successes in the last, well, since 1999, I think you said you started your journey. There must have been some point, though, where you've tried something that didn't work. Yeah, you maybe went away and had a think about things. It might have been that time we had a year out, maybe just to refocus and re-energize and decide what you're going to do going forward. I mean, can you give us an example of one of those moments in your life when you've had a good kick in the balls, for want of a better term?
I think that's a good question, Kenny. I think the answer for me, a good example of that is Guild Esports. So Guild is a company I started with David Beckham back in the heyday, 2019, 2021. Basically, our thesis was to create the Manchester United of esports. Awesome thesis, totally dead on, still dead on. Company exceeds revenue, but we missed this idea that the market wanted profitability as we moved into a new cycle in 22. And so if you take a look at Guild, super high profile deal, was sexy. I still believe in the company, frankly, because they have Subway and Sky and a whole bunch of great sponsors, and their revenue is growing, but they need to be profitable, and the market's telling us that. And so I think the mistakes that I've made, if you sort of get that example, and obviously it's a very high profile one, when you enter into a business with David Beckham, you have a high profile. And the answer is you have to, I didn't react, or we didn't react fast enough to the market sentiment changing. And I've done that a couple of times to my detriment, right? When markets change to growth, you better see that coming and react. And when markets change to, you got to be cash flow break even and start showing business metrics that, are classic business metrics versus number of followers or other vanity metrics. I think I've made mistakes around not reacting quickly enough to those issues as they come up.
Yeah, no, that makes sense. I mean, I'm quite the Guild story. When I watched it when I IPO'd and followed it recently, actually, but I just jumped on to LSE various. See it's up today, so I maybe catch up with some of the news. But no, definitely esports is a very interesting market, and it was very hot for about 18 months.
Wasn't it?
Yeah. I mean,
hotter than hot.
So sometimes you need a little correction, and it's a survival of the fittest. To say there was maybe 10 companies in the LSE into esports, you might find that there's 4 or 5 left now. So it's not. Sometimes it's not a bad thing. It kind of.
Yeah, and the thing that I fault myself on that, Kenny, just to come back to it, is like I think we called the market. I certainly didn't call, like, FaZe Clan's a good example, right? FaZe Clan came public on NASDAQ through a SPAC at the same time we did. They were valued at multiple $1 billion. Like, they traded up to $20 a share. They sold their company 2 weeks ago for sub $20 million. Like, the fact is, the thing that I'm really proud of on the Guild side, and the team, Jazz and the team have done a good job, is they've managed their cash flow so they didn't die. But now you have this big hole you need to climb up. I think they will, frankly, but it's that's tough.
Yeah, definitely. All right, so we've kind of covered your career, and you've certainly been very active and busy in the IPO front. How did the AI opportunity come around? I know you're into tech, and you've always looked at emerging tech, etc. But obviously AI is a bit specialised. So when did you first realise that there was an opportunity to get involved?
Okay, so let me back up on the AI side, because so I think AI is so much bigger than anyone really understands. So when ChatGPT came out last November, like you guys, I started playing with it, and then when I start to play with the technology, I really dive deep into structurally, what does this mean? How does it change things? Is it, Web 3.0 or 4.0? Is it a step change, or is it a sea change? And I quickly realized, like really quickly, this was a fundamental change. And so if you think about, and we'll sort of get into some esoteric conversations here, but I think it's important. If you think about what developed out of, say, the 1950s and 60s in Western Western culture was this idea of a new meritocracy. And the new meritocracy, which all of us have had a huge part of, is basically predicated on this idea that if you are, and I really like this, it's not my words, but if you are pleasing as a 15 to 18-year-old, and if you are able to score well in standardized testing, you are somehow elite, right? So I'm going to unpack that a little bit, meaning basically our entire culture moved in the 50s and 60s to this idea that if you got into Cambridge or Oxford or the LSE, or if you got into Harvard or Yale or Stanford, you somehow had a meritocracy elite status stamp put on you, which means you get to run the country. And what that meritocracy meant was essentially you're intelligent. Okay, so if you fast forward to today, if you think about all of the children that you guys deal with and I deal with, the only we care about as parents is getting our kids into these elite universities, right? And why? Because it confers upon they get that then go and run our Western democracies. Okay, and I know I'm going in deep on it really matters. How does that change when you essentially have created cognition at a cost lower than human output? So let me put it differently. What happens when all of that meritocracy gets eaten up by AI? Now what's meritocracy? Now what's valued in society? And so I had this really, and it's not me, but reading through all the literature really done is we've reduced the cost of intelligence. It's a fundamental change in human society that we're going to feel for the next 100 years. Now, what that doesn't mean is that we're going to have some generalized intelligence that's going to be robots taking over the world and it's like RoboCop or something. But what it does mean is that what we value, taking standardized tests, your A levels, SATs, doing courses in college, all of that is changing. And then the question is, what's the economic opportunity that's going to come out of it? So I'll pause there. But I think that AI is like, this isn't just internet. This isn't just connectivity. This is coming at the heart of meritocracy and human intelligence. And once the cost of cognition, which it did this year, goes below the human cost, you basically are eating human behavior. That's what AI is doing, which has this unbelievable impact on work. I'm going to pause there. Any questions?
Yeah, and I was just thinking, obviously you mentioned about Chat GPT coming out. Obviously that was the first cab off the rank, if you want to call it that. But there's so many out there as well at the moment. It's just, there's just a massive amount of them. So there is, and every day there seems to be another one launched. So it's again, is it going to be a bit like with esports? Is there going to be multiple companies listed, and then some will fall away, and you're left with a sort of core 4 or 5? I suppose that's like the same with any technology revolution that's happened in the last 30, 40, 50 years. It's always the same. How's Cykel going to be different? I mean, it's maybe a good chance to give you a chance to give us a high level overview and then explain why Cykel will be different to what's out there.
Sure. Yeah, let me give you a quick founding story. So the founding story of Cykel was I'm playing with ChatGPT and I'm saying to myself, all of the things I just mentioned about meritocracy and intelligence and cognition. And then I said to myself, where's the low-hanging fruit on the business side? And I think the low-hanging fruit on the business side is the underlying natural language models are really good at generalized content creation, content searching. So if you put it into layman's terms, it's a juiced up Wikipedia and an incredibly good grammar. It can search stuff and give you any information you want. It can write stuff in the way that you want it to. That wasn't good enough for me. And I started to think about my days back as being a business development manager, a salesperson, and thinking to myself, how could this change my job? And the analogy that I came up with was ChatGPT or Anthropic's Claude natural language model or Bard are all really big brains, big heads, big brains. They don't have hands. They can't do anything for me. And as a digital worker, I'm spending 20 to 30. The question that came up, and I love doing this for every company I create, which is the founding question of Cykel, create digital hands that do things using the digital brain. Cykel, put very simply, is a task operating system. And what it does is it goes in and makes lives more efficient. So the best use case that we've come up with, and the use case we're going to market with very short, is the sales use case. Salespeople spend an inordinate amount of time going through their CRM opportunities, inviting those people to meetings, having the meeting, doing the follow-up. All of that takes 30 to 40% of their day away from prospecting or from talking to customers. So what Cykel AI does is, let's just take an example. I want to get you, Kenny, into a meeting. What I do is I go to my Cykel AI task operating system, which is essentially, think about it as like a button in my browser. And I say, met Kenny at the conference. I want to get him into the webinar next Wednesday. Add him as an opportunity. And that's all you have to do. You do not have to go into CRM. You don't have to go into your calendar. And the AI takes over. And it basically sends you, Kenny, a couple of invites, puts you into the CRM. Once you're in the webinar, I get an update, and I just saved 3 hours of my time. If you multiply that out over, a year, you are making companies more money and making them more efficient at the same time. That's the core idea of Cykel.
Interesting. I mean, I've looked at your presentation. I mean, I had a rough idea, but obviously it's a lot better hearing it. And I'm looking at obviously you guys have just listed. I mean, you might want to cover the raise as well, because I think you actually raised £1 million more than you anticipated, which is quite an achievement in this market.
Yeah, it was a welcome week in London. We actually 2.5x'd the amount that we needed to raise, which was first time I've done that for 2.5 years. Yeah, it's very cool.
Does that speak about the sentiment in the opportunity then, do you think? Because I know a lot of companies are struggling to get raises away.
Yeah, I think there's two things. One is I want to give a shout out to Clear. Clear is our broker. They just worked their tails off and did a fantastic job on this raise. That's number one. So you got to give credit where credit is due. I think number two is everyone's talking about AI, and I would challenge any public market investor to say, okay, what am I going to buy besides the big FANG stocks and NVIDIA that gives me true upside in AI? And the answer is there's no inventory. So what I learned from this is public market investors want exposure to AI at every stage. This is an early stage, obviously. And so I think, Mark, the answer is there's no inventory. People want AI. And I think the other thing is I think they're feeling a little bit better than they were a year ago. That's my sense.
Okay.
And obviously, you guys, as far as I'm aware, you might be able to correct me in this, Jonathan, you're the only listed company in the UK.
Yeah, correct. First pure play listed company in AI, which is, I think, again, coming back to why our stock is doing so well. We're doing some promotion on it, obviously, but not an inordinate amount. And it's up 3.5x since we listed, which is with some volume, which is pretty cool.
Definitely. And what's the roadmap looking like for the next 3 to 6 months? I mean, obviously product launches and securing probably SaaS customers, I imagine, as well, will be your target for early 24.
Yeah, correct. We are, again, coming back to the guild analogy, we are building a fundamentally sound business, right? So we're going to build product. Imagine a scenario where we are selling product and making margin on it. Imagine a scenario where, it's not about vanity metrics, it's about real metrics. That's the way we're building this business. And we're recruiting people that share that ethos with us. So we are in team building mode. Product is actually going out to beta customers in a couple of weeks, which is really cool. And we've told the market we're going to launch the product in Q1. And I think we're very much on target for that.
Perfect. Yeah, I'm just looking at the roadmap just now. I mean, it's quite an aggressive roadmap for 2024.
Yeah.
20 customers by the end of Q3 2024. It'll be interesting to see how that pans out. Definitely want to watch. And why did you? I know you've done obviously Argo on Aquis Exchange before, Jonathan. So you know all about the exchange. is there nothing? What's the opportunities like in North America? Is it an overcrowded space in AI over there, or is it similar? There's not really much in the market
No, I
listed.
think great question. My sort of being in the public market space, and obviously I started in the private space, but my analogy to the public market space is Canadians and Aussies are always first in public markets. Like we are the most aggressive. When you see a trend like crypto, it happened in Canada first. You guys in the UK and the US are a bit slower, but when you adapt, you go bigger, right? Because bigger markets, more money. Canada right now, the AI market is going crazy. In the US, on the private side, I'm lucky enough to be an investor in a number of venture capital firms. The froth on the AI side is as large, if not larger, than what I saw in crypto back in 2019 and 20. So you are seeing unbelievably competitive deals. Just to give you an aside, our biggest competitor in the space is a company called Adept. Adept raised 350 million on a more than 1 billion valuation for the same idea with nothing. Like they have no product, no launch. I don't think they're going to launch for a year. And they got valued at $1 billion privately by venture capitalists. So the froth in the venture community, because they're always acting first, is unbelievable right now.
So that's North America?
That's correct. Yeah.
Yeah, it's so funny, isn't it, how things are valued differently over there. Why did you go for the London market?
A couple of reasons. One is I've had one of my biggest successes here, which was Argo. I have really good relationships with very large institutional investors that have basically said, as you guys do your next companies in the next wave, AI, we want to talk. And so getting this on the Aquis market made a lot of sense. As you probably know, I also did a very large deal on Aquis back in 2020 called NFT Investments, raised 38 million. So we've raised a lot of money on Aquis, and Aquis is a great market to be on. They're a great group, and it's been a pleasure working with them, and very happy to be listed on Aquis.
Would you look to dual list?
Yeah, we definitely would look at that. That made a big difference for Argo, as an example.
Yeah, indeed.
Yeah. And the product launch, Jonathan, is going to happen before the end of the year. Is that still the plan?
Yeah, the idea is we have a number of beta customers that are going to take possession of the product, like I said, in a couple of weeks. That gives us mid-November. The goal is to have a ready, anyone can use it product by the end of the year or early January. Yeah, and we're well on target. The product, really good. I'm super impressed with it.
Yeah, and it'll just be in the App Store, same as most other apps.
No, actually, it's not an app. It's not an app, Kenny. It's a Google Chrome extension. So it's a Chrome extension. It sits on your Chrome browser, and basically think about it as like a button you can press anytime you want to get it to do something. It's a very cool UI, actually.
Okay.
Yeah. It's like I've got the MetaMask extension in my desktop for crypto. It just means I can leave the phone. I don't need to use the phone and just use the extension. But that'll be easier as well, because getting an app verified, and especially I think in Apple, can be a bit of a nightmare. So it can. I think
that is
the hoops you've got, and costly as well. Very costly nowadays.
Yep.
So will the extension be a paid-for extension?
It will not. It's going to be a freemium model, Mark. So we're kind of thinking about this like Slack, right? Which is my goal is to get, let's say you and Kenny work in the same company and you're both sales guys. I want to get you so into this that you tell Kenny. And then at a certain point, we go into your VP sales and sell an enterprise license. So it's free to use up to a certain number of tasks a month. That's where we're going to gate the paywall.
I see. Okay.
Yeah.
And how are you planning on? You say the product's basically ready. It's in beta testing now. Looking to launch imminently? Did you say?
Yeah, next 6 to 8 weeks.
Next 6 to 8 weeks. Okay. Yeah. And I presume you have a marketing strategy as well. How are you going to get the word out there?
Absolutely. We are focused almost 100% in V1 of the product on sales teams. And so we've actually done customer discovery on about 10 to 20 of them who are eager to try this. And then it's going to be a online campaign, LinkedIn, like it's the blocking and tackling of B2B marketing that I'm sure you guys are familiar with.
Okay. Interesting. I'm very keen to learn more. Is it anywhere? Have you got a repository at the moment, like a website with examples, or are you still in the beta testing before
No,
you?
we're Cykel.ai. You can go check it out. And there's a website there. Obviously, some sense of where the product's going to be.
Okay.
It's the product is not available for general download yet. That's where we're getting.
Yeah, okay. I can just imagine, video examples of how it can be used could be very valuable for. I mean, I'm sure you've considered all of these things to get people on board with it, but the kind of short, that you see going around on Twitter or the Instagrams or TikToks about how you can automate these tasks in a real world environment, nice and short. I think that would be quite a good way to entice people in, and I think it would show off some of the features there.
I agree with you.
Cool. Okay, well, I look forward to seeing some of them. Just going back to the investing case, of course, away from the product, just looking at actually holding shares in the company. What do you think is going to drive value? I mean, you've already had a good, successful IPO there. What are your goals for the company on a corporate side of things? And do you think a lot of I know I do want to talk a little bit about Bitcoin. You had a lot of experience in that. Do you think the success of AI and tech companies such as Cykel AI is also linked into the tech like Bitcoin, for example, and the kind of sentiment in that space?
Yeah, I think so. Short answer to start with is I think you build value in businesses by execution. I think we sort of started that. I think you end there, which is we have to get our 20 customers. We have to delight them. We have to make profitable business with them, and then rinse and repeat and scale. And so it's not brain surgery to build a great tech company. It is discipline, and I think we started with this as well. The right people driving the bus at the right time in the right seats. What I'm seeing on the macro side, and I'm certainly not Nostradamus, but have had pretty good predictive abilities here, is risk assets are about to come back on. Why are risk assets going to come back on? Because there's a US election in 12 months. I don't know if you saw the New York Times over the weekend. Biden is not winning that election. And so good economic times are coming back to the US. What does that mean? Quantitative easing. What does that mean? Interest rates coming down. What does that ultimately mean? Risk capital coming back. And so I actually think this is a crazy thing to say because it's been so depressing for 24, 32 months.
Indeed.
I think we're coming back. I mean, obviously the Middle East is a big problem. Ukraine is a big problem. Those things are massive problems that could get bigger, obviously. Outside of that, and say China invading Taiwan, we are in for some good times. I think the party's coming back and risk assets are going to come back on. And those smart investors that see that coming are going to do incredibly well in the next 12 months. That's my prediction.
Well, I like what you're saying there. The party's coming back. When's the party starting, though? That's the big question. After the election? Before the election?
Oh no, it has to start before. I think we're starting in Q1. I'm predicting money printing. They call it cowbell. More cowbell in Q1. Interest rates come down. Risk comes back on.
Okay.
You've already seen it in crypto, right? Like crypto's the canary in the coal mine because it's the freest trading market in the world. So when markets went down, crypto started it. Crypto went first. When markets come back, crypto goes first. If you look at the run up, even over the last 2 or 3 weeks, you are going to start to see crypto, tech stocks moving up quickly leading into Q1. That's what I'm predicting.
Okay. Well, you heard it here first. I like what you're saying. Kenny, you must like that. I know you're still a big crypto investor, aren't you?
Yeah. It's just the same as anything. It all goes in cycles and waves. It's just catching the peaks and troughs, hopefully at the right time. But no, definitely crypto when it's sitting with 35,000 or something at the moment. It doesn't seem that long ago. It was at $13,000. So it's just seems to be quietly doing it rather than what it was doing in sort of 2021 when it seemed to go from like 5,000 till it's 60-something thousand in the space of 3 or 4 months. But then there was a halving as well. We've got a halving coming up next April, May, I think.
In April. Yep, exactly.
Yeah. So if you look at, I know crypto's not got Bitcoin's not got a massive chart history, but it always seems to rally around about the halving. So I think crypto's set up very well for 2024. So let's watch that space as well. But no, it's been great having you on, Jonathan. I think that's it's nearly an hour, not an hour, 55 minutes anyway, I think. So, yeah, that's the beauty of these podcasts. You just start talking, and before you know it slips by. So, yeah,
I think you're one of the most energetic and bullish. You're not a CEO; you're a co-founder. Maybe you will be CEO one day, but one of the most energetic and enthusiastic guests we've had on in a very long time, Kenny. Which is a refreshing change. A lot of people sound very downbeat about the market, but
let's go, gentlemen. It's party time. I hope this ages well in Q1, but. I'm telling you, I'm seeing it. I'm seeing the green shoots. I'm excited.
Well, yeah, you said it at the start. You look for those green shoots, and you go for it, and you have had the success behind you to prove it. So, thank you very much for coming on, Jonathan. I know we'll be talking again a lot in the future. We can certainly revisit this podcast, longer format later on. Maybe towards the end of Q1, we can discuss all the things that you've achieved in the company, and again how the markets are performing. But I know we'll be talking on normal interviews, and maybe even a bit of a product demonstration, a bit of a special feature on the product itself when you're ready to share that. We will, of course, on Stockbox be more than happy to give some time to that, to understand more about what you're doing, and of course giving investors a better idea of the potential for generating a decent return. But I think for now, that pretty much as Kenny says, we're up on an hour there. That's a decent length. So unless there's any final thoughts from anyone?
No, I'm all good.
Cool.
All good, guys. I appreciate the time and really appreciate being on the podcast today. Thank you.
No, thank you so much, Jonathan, and we'll speak again soon. Take care.
Cheers.
Thank you for listening to another podcast from Market Musings with Fairbairn and Russell. Tune in next time.